Welcome to this episode of Market Shares. I'm your host, Tony Blodgett, and I thought today we would just take a few minutes and go over what's going on in the market. Let's do a little market update right now. And I want to start by talking about home values. I mean, gosh, over the last year, you can't turn on, the mainstream media or even on social media or YouTube pages, so much doom and gloom about a housing crash. So, let's talk about what's really happened. Have we seen housing crash? Is it still yet to crash? What's really going on here? So we're going to talk about that a little bit. And look, there are some parts of the country that have seen some decrease in value. But is that continuing, or are we turning the corner? So let's jump into it. So we just saw that CoreLogic came out today, actually, as I record this. So this is a few days before it's airing here. That CoreLogic says home values up 0.8%. This was for February, and up 4.4 year over year. So for the last 12 months, up 4.4. They've also revised their estimate for the next 12 months to be up 3.7%. So what that tells me is CoreLogic, who I think has a really good finger on the pulse of what's going on with home values, is saying that year over year, we've actually gone up a little bit. In the last, in February, we went up by 0.8%. And that we're going to continue to see small increases. I think they're expecting 0.3% next month, with the next year being at 3.7%. You guys, that's anything but a housing crash, in my opinion. So, and let's look at a few other ones just to be fair. We do have Case-Shiller and Black Knight and FHFA, and we've spoken a little bit about FHFA in the past, and then we have CoreLogic. So everyone is showing a bit of a decline from the peak, right? So the peak was June of 2022. So since the peak, Case-Shiller shows that we're down 2.95%. Black Knight shows we're down 2.6%. But the FHFA, which is Fannie Freddie, show that we're only down 0.06% since the peak. And the thing that's different about the FHFA survey is that it excludes cash offers and financing on jumbo mortgages, right? Because it's just Fannie and Freddie. It's just conforming loans that we see there. And so that's telling to me, what that says is that we may have seen some of the sell-off in the higher end luxury market. That's normal in a downturn like this. And it also might mean that the people that are paying cash or using a cash buyer program like the one that we have, the people that are doing cash transactions may be getting a little bit better deal than those that are using financing. So that's interesting statistic. Now, I did pull up, and this is looking specifically at the numbers from Black Knight, which I told you their national numbers like 2.6 that were down since the peak. But there's certainly pockets around the country that have been more than that. We've seen up where I live, up in Seattle, 11.8%. We've seen parts of California that are between 7 and 12%, again, since the peak, and that's through February. But I think what we're seeing right now is that window of time, and we talked about this, that window of time where we saw home prices drop a little bit after June. We're already starting to see those come right back up. And this is in the face of still pretty high interest rates. I mean, as we sit today, rates are in the mid to upper sixes, depending on your credit score. If you're buying investment properties, I mean, you got rates up in the sevens. So, we're still in the face of pretty high interest rates. We're going to talk a little bit about when that changes. But the fact that we've kind of bottomed out, we're starting to already see month over month appreciation again, it speaks to the fact that we have very low inventory and this window is closing. So the reason I bring this up and why I think it's so important is that if you're looking to buy a home in the next year or two, I still hear people say, yeah, we're just going to kind of wait it out and see what happens. I am telling you that waiting it out is not a good strategy. I just don't think it's going to play out very well for you if you think you're going to wait this out, because what we think is going to happen is interest rates are only going to improve from here. It is going to be a little choppy. We told you that the inflation numbers for March of 22 was a very low mark. It was 0.3%. So we probably won't see a big move with inflation with the report that comes out on CPI, which I believe is April 10th here in just a few days. Probably not going to be a huge market mover. It's not until the May 10th that comes out, which is reporting April's CPI, which we also think is going to reflect that rollover and finally catching up with the shelter costs. We know rents have come down a lot, but it takes a long time for that to find its way into CPI. So we're still thinking May is when interest rates improve. So think about this window we have now. We're at the beginning of April. We're already seeing signs of housing stabilizing, if not increasing appreciation. We see other signs around the economy of things slowing down. Today, interest rates got a little bit better. Why? Well, because we had the JOLTS job opening report come out today. The JOLTS report came out, and there was 632,000 less jobs available. This number's been trending down every single month. And so, we still have to see how the ADP comes out, which I think is tomorrow, which would be Thursday or Wednesday, sorry. And then the BLS jobs report could be a market mover. So we're going to watch that, because if you remember back, I think it was in February, huge job gains, and we're kind of expecting to see some correction to that. And we really saw the market sell off when we had those 570,000 new jobs created. So remember, there was a lot of seasonal adjusting to that and so on and so forth. So big jobs week this week, but it started off with the JOLTS, and the JOLTS was not looking good. These are signs of a potential recession. What happens during a recession? Well, interest rates get better. It's not going to solve our inventory problem. So back to that, you guys, listings nationally. We have 563,000 homes on the market currently. This includes homes that are already under contract. Typically, that number should be 1.2 to 1.4 million listings. We have 563. Here's the other thing. Typically, as we move into April, we should be seeing seasonally a pretty significant increase in homes coming on the market. We're just not seeing that this year. Not yet, and I don't think we're going to. Why? Well, for obvious reasons. We have a whole lot of people, 80% of homeowners, who have an interest rate under 4%. They're not going to want to trade up right now for a bigger home and take on a much bigger interest rate and payment as well. However, if we see rates come down, even if they come down just a little bit, that gap is going to close, and we're going to see more interest in people, maybe looking at the idea of moving up or whatnot. So look, you guys, all this to be said that we had a window of time, I feel like, from when the market first shifted in June of 2022, values softened in many cases. You were able to get the seller to pay concessions. You could pay for a 2-1 buy down, these things that we talked about. That window, in most cases, has pretty much closed. We're getting back to multiple offers. We are still in that window of opportunity because rates are still high, and we're just feeling the bottom of home prices softening. So I would say we're in the last inning, if you will, maybe the last quarter of this window of opportunity. That's where we're at right now. I think that as we continue to move into spring, we see interest rates come down. I don't think that our supply issue gets a lot better, and it's off to the races again in a very competitive market. So just know that information. Now, here's one other thing that we are finding that you might be running into in a market like this, and that is low appraisals. And you go, well, low appraisals, why would appraisals be coming in low if we're talking about, values already going back up? Well, here's the problem, is that appraisals are based on historical data. And so if we know the peak was in June of 2022, and when we do an appraisal, we're looking back at closings, comparable sales that have closed in the last 6 months. So as we think back and look at the last 6 months, what we're going to find is that some of those homes did sell for less, right? We were able to negotiate a lower price in many of those cases. And so now things have kind of turned the other direction and we have this gap. Now, the good news is all of us in the mortgage industry, we are experts at dealing with this challenge, because in 2020 and 2021, when home prices, mind you, went up 40%. So from pre-pandemic till the peak of the market, it was 40%. So when I talk about a 2.6%, 2.95%, even certain pockets being close to 10% pullback, we're talking about a small give back of the 40% appreciation that we saw. But nonetheless, when that was happening, we had to get really good and creative at appraisal, what we would call appraisal gap strategies. How do we deal with the fact that someone's buying a home and having to escalate $50,000 over price, so on and so forth? And so we have a lot of strategies in our back pocket to leverage different ways of structuring your down payment, your mortgage insurance, things like that, that we can help ease that burden. But just don't be surprised if, because things have already turned the corner and we're looking back at comparable sales over the last 6 months, I think this solves itself pretty quick. But don't be overly surprised if you're in the process of buying a home and you find yourself in a low appraisal situation. The other thing that we can do is we do have close relationships with the appraisal companies that we work with, and through our operations team, we can help gather additional data and help fight back on that too. In some cases, if there's other comps that maybe should be considered, getting some help from your real estate professionals locally sometimes can give additional data to the appraiser, and we can move the needle there. So don't be surprised if you hear a little bit about appraisal challenges. It's just indicative of this kind of a market, right? As things have kind of turned back around, values start going up, all of a sudden we're going to have this little window of time where the comparable sales that your appraiser is using may be a little bit low. So that's kind of what I wanted to hit on, you guys. I wanted to touch on this and let you guys know, whether you're a mortgage or real estate professional, share this with your clients. If you're a customer out there thinking about buying a home, you need to know this information. You need to know what the actual stats are, not what the headlines are telling you, because that's fear mongering. This is reality. And as we can just kind of forecast a little bit ahead and see, there's definitely signs of credit tightening with the banks. That leads to less economic activity. That can lead to a recession. We're seeing jobs numbers, less job opportunities. That's what the Fed said they were waiting to see. They've been trying to create a situation where there's less jobs, right? They want to create some pain. We're starting to see that. All of these pieces are starting to come together that are showing us that lower interest rates are more than likely ahead, and that's really going to fuel the housing market. We've seen it over and over again. Another thing that I wrote down here, the central banks in both Australia and Canada paused their interest rate hikes. So is that a forecast of what we might see from the Fed here locally as we look at all the signs that the economy is slowing, inflation is coming down? So except for house values, I think that those stabilize and really start going up from here, probably at a quicker pace. So now's the time to purchase a home if that's what you want to do. Sitting on the sidelines because you've heard a crash is coming or something is a fool's errand. I would not recommend doing that. Research some of this data that I'm talking about. Come to your own conclusions at the end of the day. But the writing on the wall is there, as far as I can tell, that your window to get a good deal on a home is closing. So with all that being said, I appreciate you guys taking the time to watch Market Shares. We like to mix it up. Hopefully this was helpful information to those of you that are thinking about buying a home, or if you're in the mortgage and real estate industry and you're working with clients that are kind of on the fence about what to do. Hopefully this information is helpful. And until next time, like, subscribe, Share this with your industry friends, and we'll see you next time on Market Shares.